Okay. So we're here. All right. It's actually breaking structure there. Okay, this is good. This is good. This is the 1 minute, 1 hour. I hope everyone is there so that we can continue. It's good. Do not disturb. For hourly. Okay, good. Is everyone here? So we can begin. Okay, we have hello. Shamoon. We have 4 people. All right, we can just begin, yeah? All right, so what we were looking at before, we were looking at price continuation patterns, and we were talking about bull and bear flags, and we also talked about bull and bear pennants. These are our 2 groups of price continuation patterns, yes? Okay, you can also see ascending triangles as ascending or descending triangles as, yes, we have it returned indeed. Shalom Peter Monster, interesting name. So we can also see ascending or descending triangles as price continuation patterns, yeah? So ascending or descending triangles are similar to bull or bear pennants, but they have a much more like the bias is pretty clear. We would see this. Let's take for example this. If we have a price action that is happening like so, no, let's just take like an example. If we have price that does something like this, this would be an ascending triangle, which you can take from here. It looks more like now. Don't really mind my. I'm just gonna cancel this so that you see it there. We have it like so, and like so. So the bias here is that price is going to go to the upside. Yeah. So you will normally you would have price coming here, going up like so, hit this resistance, come up like so, hit this resistance, and so on and so forth until it does this. Yeah. Now be careful though, because when you see this type of price action, it could easily come down here, you know, to make people think it's going down, then it goes back up like so. This happens all the time, especially with Bitcoin. It likes doing this all the times. So what I would usually do is try to catch it here, but I know that it may as well just go up from here. So again, there is no other thing to do than to enter here, but have a stop loss that is wider than this place. Remember, we are trying to capture the entire move. All right, I'm just gonna show you what I do. We're trying to capture the entire move. So if you are buying or longing, it does not really need to be with futures trading. If you are buying, yeah, and you want to buy here, and you want to buy here. Now, if you buy here, it will make you 4% profit already. Yeah, 4% profit added to what you would have bought if you bought here. So if you bought here up to here, let's just put it at here, say, yeah, okay. Okay, good. Now if you bought here up to here, you're making 13% profit. Yes. Now, but if you bought only here, you'll make 9% profit. This is for just buying. It's the same. Longing, shorting just exaggerates the gains and the losses. That's simply what futures does. It exaggerates losses and gains. If you gain in normal trading, you'll gain more with futures. If you lose with normal trading, you'll lose more with futures. So it's simple. Okay, now this kind of strategy, if you buy here, you will make more, but if you were buying here, you will make less. If you wait to buy here, you could miss out on this here because price can just go up from here. So if you are in a long, for example, where you have a stop loss, all right, you cannot put your stop, if you're swinging, you cannot put your stop loss anywhere here because you know that price can go down till here. You don't want to miss out on this rally. You know that perhaps this was maybe from a huge move up, so it may validate this as a bear, as a bull pennant, and continue to go up right up to perhaps right up to here. Yeah, so you want to capture this entire move, but you don't know if you wait to buy here, price may as well just go up. So you want to enter here. Yes. All right, how do you do this type of thing? What I would do is I will enter here with a lower leverage. Yeah, I will enter here with a lower leverage, maybe 7x or 4x. Yeah, and if the price comes down here, I will add to that position. I will add to the position when it comes down here, but I will be ready to close if it wants to continue going to the downside. Yes, so basically that's what you would do in this type of situation. So ascending triangles are also price continuation patterns. So if you have something that looks like so, if you have price comes up and goes into this ascending triangle like this, then you know that the price going to the upside is about to continue going to the upside. The same is true for price continuation to the downside. If you see this, if you see something that looks like so, then you know that price is going to go to the downside, and this is on Bitcoin chart right now. In fact, you can see it clearly on Bitcoin's chart, and I'm just going to show you now. BTC. Okay, now you can see that on Bitcoin's chart. If we come to the daily time frame, is this Bitcoin? What is this? Are we looking at Bitcoin? No, let's go to the weekly. Maybe. Is this? Oh, I inverted the chart. Okay, cool. Okay. All right. So yeah, that's what I was talking about there. Now let's go to the daily time frame. I inverted the chart for a second there, and I forgot that I inverted it. So it got a little bit confusing when I looked at it. Okay, so you can see the same thing happening on BTC here. So this is the on the weekly you would see it, and even on the 3-day you will see it clearly. It's not looking so nice here, so you will not easily see what I'm talking about. But anyway, let's look at it like this. We have the let's go to the daily. I want you to see the candles closing on the bodies. Okay, the candles close here. Okay, good. Now you might have a quick question that why did I put my trend line here and put it on top of this candle closes here? Yes, and this will explain what I was telling you before. First is that you have to respect price action. You always have to respect price action when drawing your lines. Do not be emotional even by a second. That will make price follow what you think could be the possible scenarios easily. here we are trying to draw a trend line, adjacent trend line like this one, like so, and then we meet the first close here. We must put our trend line within at the ends of the bodies of this first close here, and we will maintain that trend line throughout. We can see this wick bouncing right off of the trend line right here. So this here would be the fake out. Yes, the fake out I was talking about. So after I told you that if you see a candle close below your trend line like so, you need a confirmation candle to confirm that this close right here is good. Yeah, so you will want to wait for that confirmation candle right here before you want to short that movement. Okay, if you already shorted here, you will see that price will go up and take you out. Yes, so you need a confirmation here before you short. Now I shorted here, I shorted BTC at 20,800, around 20,800 around here. Yes, and I used this same strategy that I'm telling you now. I did not get any confirmation candle. So what did I do? Good. So as I was saying, you will have this. You'll have this here. Yes, you'll have it like so. Now this is too perfect. This okay, good. Now this descending triangle is too perfect. It is a price continuation pattern. It shows you that price is going to continue its downward trend from here, and that's actually problematic because it's trying to tell us that it's essentially we're going to hell. Yeah, it means if it's to continue the downward trend here, then this is really looking very ugly, I would say. Okay, so why did I take this trade here? First, this is our descending triangle. Yeah, how do we get the targets? As I was telling you in the other video, we get the price as the price bounces from the support and resistance. That's a target. Okay, so the first price target, how would we get that? We will take the bounce from here to here. That's our first price target. So first price target here to here. Now you can also take this as a first price target here, as a mini triangle, a mini this. Okay, and you take this from here to here. If you are being like maybe scalping or very conservative, you can take this here as a first price target. So that can be your first price target like so. And don't try to make the lines straight, just put it there. All right, okay, good. Now second price target, let's take second price target here to here. Now guess what, it's bouncing right off of that target. Look, yeah, not exactly there, but it's somewhere there. And as I was saying in my other video, always take profits before the target itself. Don't wait for the exact target. Now you will even notice that even though it did not bounce exactly at the target here, it came back to bounce at that target. All right, this bounce right here. Let's just take this stuff off so that you can see exactly what I'm talking about. Okay, good. Now if we take a horizontal line, you will see that price is bouncing right at the target. Where's our horizontal line? Okay, good. Now that's it. So you can see that price is bouncing right at the target here because it forgot to bounce here, so it needs to come back and respect that target. All right, it will also come back to respect another target, which we'll talk about now. Now, where is our next target? Next candle close to the next candle. So next candle top to the support, to the resistance, and next candle close to the support. So here to here. Yeah, so we're looking for the close here, not this one. We are looking for the close here. You can also take it down straight like so. So we're just going to take that and put where price broke to the downside. Okay, good, beautiful. Now that gives us a target of $14,426. Yes. Okay, good. Now if we took that from here straight down, I think it should give us about the same target. Yes, it should give us something similar. Yeah, about the same, 14,278. So I take the exact target from here to the next close here. Now, next, we go for the final target of the descending triangle from here to here. Yeah, and we put to the downside where it broke out of it, and we are getting $12,136. Yes. Okay, now that we are there, we can, I want to see something here. What if I took this and put here? What if I put this here? Will it give me that target? Yes. Why is it giving me this target? If we put this line here, like so, why is it? This is the beauty of patterns. Okay, this is the beauty of patterns. If you look in this descending triangle, you'll see a lot of patterns. The first one that we can immediately notice from what we have been talking about before is this one. This one right here. This, a bear flag. Yes, we can immediately notice, but we want to put it on the candle closes. Yeah, we want to put it on the candle closes like so. Good. Now, candle closes. We want to put it on the candle closes. Okay. Now, as we said before, price should, when it breaks out of the ascending wedge like so, the target for it, the ultimate target for the ascending wedge, is the bottom of the wedge. That's what we got here. I made a video some time ago on TikTok, and I told you guys that BTC came down here to 20k, around 20k here, and it will come back there. That's what I was looking at. I saw that it broke out of here and it was going to the downside. I knew that it has to come back here. It's like a law of nature. It has to follow the pattern. Human beings are emotional creatures. Everything we do is because of some emotion of some kind. So we turn to follow nature. We turn to follow patterns. As I was saying in the previous video, all we do follows some pattern. It must be in a pattern. So this pattern is telling us that the target for this price decline here is down here. That did happen. But no, as it came down here, what was it telling us? That this plus this pole is a bear flag. So if we are to take the target for the bear flag, what will we do? We will take a measurement from here to the bottom of the flag, and we put where price broke out of the flag to the downside, which is this line right here. And if we put that there, it will give us this target. So from here, you could know that this is going to 15k. I made a post on my Instagram. Some time ago, and I told you guys that BTC is quite literally staring at 15k on the daily. And I think I left it here. I said BTC is literally staring at 15k on the daily, and it has a very high chance of happening. I did say something like this. Some people said no, that can't happen. Some people said no, all of this. I made this post. I said BTC, I don't know if you can see this, BTC on the daily pointing at 15k. Yes, can happen anytime from now. Do not trade with fiat. You aren't ready to lose. It will be a shame that we get to the bottom and you don't have fiat to buy. So I made that post because I was looking at this here. I knew that this is going to come to 15k from the target of this bear flag here. So when we came here, as I told you before, Bitcoin, especially Bitcoin, it likes to do this. It likes to print patterns like this and do the opposite, a bit of the opposite, then goes to the downside. All right. So when I saw this break out here, meanwhile, everyone was shouting. oh, we are going back. And I was also saying that we could be going to 24. Why? Because on the weekly, we have this. We have this on the weekly. Where is it's this one? So on the weekly, we have a structure that looks like so. If we put this like so, and we will talk about this also. If you put this like so and like so, and take this up like so, we will find that we have a inverted cup and handle pattern. Yes, so inverted cup and handle pattern, and this right here will take us right down to about $3,000, I think. Will this take us to like 3,000, or like I think this will take us to like 5 or 3? Yeah, $5,000 around, yeah, 5. Now this 5,000 is really close to the 1.618 Fibonacci golden ratio that I was talking about earlier. That Fibonacci golden ratio is sitting at $3,868, and we also have a vector candle there. We all if you are in the Discord or Telegram group, then I think only the Discord people are doing this. We have my other analyst that has you can book a one-on-one session with. I will also start that later on, where you can book a one-on-one session with me, and we talk about the charts and you ask some questions and stuff like that. So we'll also do that soon. Yeah, so he teaches more of vector candles and another type, another way of measuring targets and trading. So essentially, yeah, it has a lot more to do with the market maker and other stuff. So but there, even with those other ways of predicting price, you will arrive to the same conclusions. It's really just funny. Whatever strategy you are using to trade, if it's correct, you will be at the same target with someone else who is using a completely different strategy. If you are trading on the same time frame, of course, and if you are following maybe similar market movements, you arrive at the same targets. You have the same, roughly the same, maybe a difference with $1 or $2, but you'll be roughly at the same point. That's how sometimes I that's what I use for my confluences. So yeah, so I thought it will come up here, because this is an inverted cup and handle pattern. Inverted cup and handle pattern means that we will go up to collect liquidity above the handle here. So you will have something that looks like so. Yes, normally people will want to short here. Where will they put their stop loss? They'll put their stop loss somewhere here. All right, and then price likes to go to the opposite side. As I told you, Bitcoin likes to do this, and then makes an M formation here, and then continues to the downside to the target of what it printed before. It likes to do that. Yeah, so when I saw this, I thought we could go to 24,000. But what made me to go back into the market at 20,800? This made me do that. I will show you right now. This right here made me do that. Now, as a matter of rule, when you are trading, yes, or when you are looking at price action, always, as I told you about this earlier, always look at the momentum of price. That's why I use the stochastic. It tells you price momentum. Does the market have the momentum to push price to this point? Yeah, if you look at this right here, you will see this high, you will see this high, you will see this other high. But here on the stochastic, you're not seeing the same thing. You have a high, then a low. Here, high and high. That's a bearish divergence. That means price should go to the downside. Yeah, that means price should go to the downside here, and that's why it went down here. Now it's still forming a relative that's actually a head and shoulders printing out there. It's actually forming, because if you take this from here to here and you take this and I'm just noticing this now, and you take this here, that's actually a head and shoulders, and it's actually doing exactly the same thing I was saying. It likes to go a bit to the upside of the opposite opposite side of the market, where if you think it's going down, it will try to go up. The same theory of market makers and people who want you to buy in as they sell. That's what they do. And that's why I don't like buying any pump. When I see the price going up tremendously, I hate to go in. I mean, it can really wreak havoc. So when you see this and you think price is going to come down here, it will go up first, then come down. Go up, take you, then come to the downside. So when I saw that, I thought Bitcoin is going to 24, but when I let's bring the charts back to the daily. But when I saw this on the daily, I saw this. I came here on the daily. I saw this rally here. This, everyone said this was the breakout. I knew this is the breakout. But this pattern is telling me that we should be going down. I saw this breakout here. I saw a confirmation by this candle here. And this is why I am using multiple things for my confluences. I saw this candle here because this comes here. This tells us this is a bearish engulfing candlestick. Yeah. So the green before the red is bearish. The red before the green is bullish. All right. The red before the green is bullish. Green before red is bearish. Red before green is bullish. So red before green here is bullish, so price goes up. The green needs to completely engulf. That's why it's called engulfing candle. It completely engulfed the red candle before it, showing buyer strength. Yeah. Then if the red completely engulfs the green before it, or even if the green is completely engulfs the red after it, it will be bearish. All right. So red, I don't know how I can say this to make it very easy to memorize. See the red candle as or see the green candle as buyers simply dominating the sellers, and that's simply it. And see the red candles as sellers dominating the buyers. So if the buyers show strength and the sellers come in and print a candle, they are dominating the buyers, especially when the sellers come in and engulf the buyers fully, like this one. Yeah, like this one. When they engulf, that is a show of strength from sellers. So all right. Okay, so that's the thing. Now, what did I see here that changed my mind? It's very easy to notice. Now, when you look this right here, immediately, I know that price left from here, broke out of here, went up to here, marked a resistance, came back down here, marked a support. Now this becomes the higher low to this one. This becomes the higher high to this one. Higher highs and higher lows. All right, we have another high here. Yeah, but I went to look at the strength. Is this really strong? Is this sustainable? Well, the stochastic told me that it is not, because you see this high here, what does that correspond with another high on the stochastic here? You have a high here, but here you have a low. So this is a bearish divergence. I take my entry here. I made the entry around here. And then it came down here and I closed at about 19,300. I closed at about here. Why? Because I knew that this could still be a retest. This could still be a retest, meaning that this could come, bounce here and go to the upside. So that's what I thought, and That's why I took the close position there. All right, how many people are here? How many people are with us? We have about 4 people. So that's why I closed my position here. Now, I closed my position and price went straight down here. I could have waited, and sold right down here. But what if it went back up? That would have obliterated the profits, yes? Now, it's easy to see this now and understand why you did this and, understand it. But when you are in a trade, the fact that you have money in there and the money is, it brings about a lot of emotions. It's a lot more different than all of this. It's a lot different. It's not this. This is, when people say they are doing paper trading, well, it's only good because you get to, familiarize yourself with the long and short stuff. But you need to put real money. You need to put even $10 and, try it with 2 or even $1. You need to put money that if you lose, it will mean something to you, because it's real money. Paper trading does not really help because it does not train your emotion, which is the most important part of all of this. You can know everything, but emotions, they can kill. That's a very big factor. So I saw this and I knew that, all right, this is going to continue going to the downside. Okay, now when price came down here, hit this low at 17,182. Okay, it came back up here, but guess what? It did not succeed to close above the resistance here. So what did I do? I initiated my short position again, because I know that this price action that comes right down here is confirming the entire pattern. It is confirming the descending triangle here. All right, so it will come for this first target. That's how you have to look at it. All right, it will come for this first price target, but I did not trade it right down to 18K because in the smaller time frames it still shows that it can reverse somewhere. All right, so that's for descending triangles. That's how they act. That's what, when you see them, expect price to break to the upside first, then come to the downside. When price breaks to the upside, you need to be on the alert and go to your stochastic. See if that price action is correct. If it is corresponded by a low in the stochastic or a low in the RSI, you have an opportunity to go short on the market. Of course, it's risky. It may as well just go up. It's that's just the way it is. It's just the way it is. Every possibility, always every possibility. There is no one single way that it can happen. Now, if we are looking at this on the weekly, then you will also see this. I talked about something that I talked about the other time, is that when price goes down, it has the tendency to retrace 50% of the candle that it went down by. So this candle that we are seeing here, price will come back 50% of this candle. That I can bet anything on. But the problem is you don't know when it might come. You don't know how. It may as well just go to 3K before it comes back there. But it must retrace 50% of this candle. And I don't think it is going to go to 3K before that happens. I think that it will come here sometime. Now, 50% will be the 0.5 Fibonacci. Will it be 0.5 Fibonacci? That will be the 50% retracement level here. this will be the 50%. Note something here. 50% of this candle, it's just by some miracle. Is it really a miracle or something? But it's the support of the descending triangle. So this is extremely this is a very strong zone of resistance that we see here. If price retraces 50% of this triangle, what we would expect is that it will form something that looks more like so. So it will be more like so. Yes. Now, being like so is also another pattern. This would have been an ascending wedge. So we talked about ascending wedges before, which will be a price continuation pattern. Price continuation to where? To the downside. Yeah, because if it comes back up here, which we talked about before, so it would look like so. It will look like this. Yes, but this is coming from something that looks like this. So it will then just be another bear flag. So yeah, even if it retraces 50% from here, except it comes up here, retraces the 50% and continues to go up, which will be highly unlikely. Why? Because if it retraces 50% here, even on the weekly, it will already be in the overbought. We are seeing that the weekly here is already getting closer and closer to the undervalued territory. Undervalued territory is below 20 here, overvalued is above 80. So if it goes to the 50% retracement here, which will be on the 0.5 Fibonacci ratio, that will not only give it a bear flag, but it will give it an overvalued weekly, 3-day, and even a daily time frame stochastic and or RSI. So we would have that, and we will have our next fall like so. Yes. Now this, I could draw this now and it looks funny, but well, that's how my predictions always look funny when I do them the first time. So yeah, so this is what we would be expecting. I do think price should come somewhere around 13K before that happens. I think I will have to make a predictive analysis video explaining that, but for this one, I think yeah, I think price will come to somewhere around 13 to 14K, 14 to 13K. I think maximum should be maybe 9, yeah, 9K and maybe 9K. Yeah, I will make a predictive analysis video, and I think I've explained it before. I've talked about my area of interest. I think price is going to go there before it does this retracement, but we are looking anywhere from 14 to 9K before we have this. That's what I think. I think we have to dump a bit more and go for the second price target here, come back up here, confirm the 50% retracement, then we plunge back down to even 3K, where we will go back up to about what was the number again that I calculated before, to about from anywhere between 9 to 12K. I think that is where we will consolidate for months. That's where I think we'll consolidate. A lot of people will say this is going to zero. I don't think it's going to zero. It's not going to zero. I could find a chart that could show that we are going to zero, but you know, it always seemed like we are going to zero. If you assume that we're going to zero, well, you will not buy and you will just wait and miss out, you know, and buy from other people who want to sell in the bull market. Okay, so that is for descending and ascending triangles. The same thing here works for an ascending triangle. If you just invert it like so, it will be the same exact same thing. It will come down here, retrace, then shoot back up. Something that you should note is that when you see price rise like so, consolidates like so, even in a straight line like so, know that the very fact that it is not just plummeting, you will have weeks. Of course, you'll be having weeks like so, weeks. The fact that it is not just plummeting is telling you that there is strong buyer strength here. Of course, you should always watch your RSI to find any divergences. That's what you should make you, you should suspect what you are seeing here. All right. So that's basically it for descending and ascending triangles. Then you could also see another, and they are also price continuation patterns. Now, price reversal patterns. If we are to look at price reversal patterns, the very common one will be a head and shoulders pattern. Head and shoulders pattern are characterized by a head and two shoulders. Normally, you would have a first shoulder that looks like so, a head, and a second shoulder that looks like so. The neckline is where the head, this two regions are in tandem like so. So if you have them like so, that will be your neckline. Now you can also find head and shoulders patterns that look like so. It does not really have to be on a straight line. It can still be like this. That will be a head and shoulders pattern. You can always find them, oriented in very funny ways, but that will be your head and shoulders pattern. So you always want to take the candle closes here and here. You want to take the candle closes here, and then that will be where you will take the neckline of your head and shoulders. Okay, now the same thing happens with head and shoulders patterns. You will easily find a head and shoulders pattern that looks like so, and the stochastic, no, not stochastic, it will easily go up back from here. No, not that. If you find your head and shoulders pattern, they like doing this before dumping. Why? When they do this, you will see this as a double bottom. It's just a mind game. That's what you're going to see. You'll see this as a double bottom and you think, oh, maybe I should long now. On your way to longing, well, price dumps and takes you out. So you always want to make sure. How do you do that? You look at the stochastic. Yes, you look at the stochastic. Is the stochastic overvalued here or undervalued? We can go to a very common example like this one right here. That's just the one that everyone knew about when I was already screaming about it at the all-time high last year. We have this head and shoulders pattern here. So how do we measure that? We take our measurement from here. We want to have the two candle closes. So this is the head. Yes, we want the two candle closes. Now you can draw this in many ways like so. You can draw this like so and like so. Yes, now that is your head, that's your shoulder, that's your shoulder. You can also take it like so. You can draw it however you want, and it will give you very good targets. That's your head, first shoulder, second shoulder. All right, so now if we are taking this into consideration as our shoulder, this as another shoulder, because you cannot put it like so, you cannot draw it like so. It will only take one close as the neckline. It will only take one close. This will not give you an accurate target. You need like this. So it's this side or this side. You need accurate closings of the head showing you that the next shoulder is about to form. Yeah, but even here we find some confluence around here. So if we take this like so and this like so, we find some confluence here on this tip here. So we could still take this as a good neckline, but not ideal. Ideal neckline will need the two closes of the candle. You will need this close here and this close here. If you get another close here, that's good. So this close here is good. We need, no, not that. All right, so you need this close here this close, this close, this close. This confluence that we have here is very good. This is very good. All right, so when you have this head and shoulders pattern, this is indicating to you that price is about to reverse a trend. You are looking at a price reversal pattern, a trend reversal pattern, sorry. So you're looking at a trend reversal pattern. What trend, you might ask? This trend. And this is what I was saying the other time, that is scary, because it is basically reversing the 13-year trend of BTC. So, but anyway, you know, it's just going to show that way you are always going to have the risks. But if we take it from here, and we are not looking at it from the logarithmic here, so logarithmic here will give us a well-rounded chart, but that was already on logarithmic. So if we have this here, this head and shoulders, it is basically reversing this entire trend starting from here. This is one of the things that make me think BTC will go below 10K, because it has to go back to where the trend started in the first place. That trend started here. If we are looking at it from the 13-year price uptrend, then it will mean that BTC will go back to 1K, to $1. So we're not taking that out of the, you know, out of the plate or something. We just want to be very clear. We don't want to taking something for consideration because we want it. No, we want to take stuff that that's what the charts are telling us. We are not looking at what we think, we are looking at what we see. All right, so that's how head and shoulders work. They reverse trends. Yeah, so you would have the head here, shoulder, next shoulder. This here will be the neckline of the shoulder. If you have price close below here, again, as I said, if you have price close below your neckline, remember that this is also like the neckline. Yeah, or the neckline, they always have necklines, the neckline of the support, but it's also the neckline. So if price closes below here, you want a candle that is closing below it, and you want a confirmation candle to that close. That's what we have here. We have a candle closing below it, and we have a confirmation candle closing. This confirmation candle with no wick and a green candle after it is a bullish engulfing pattern, but you cannot follow it as a bullish engulfing pattern and think price is going to just go up from here. Why? Because you see this candle here is confirming the entire downtrend from up here, so you don't even want to believe in the bullish engulfing that you are seeing here. Always follow the larger trends. That will be your friend, better than the, you know, the maybe some candlestick formations. So yeah, so when you see this, you know that price is still going to continue going to the downside. Now again, in this head and shoulders pattern, you can see another pattern easily. You can see this one, and I think a lot of you will already know it if you've been following up. You will see this one right here, which is a bear flag from here. So that's your bear flag. You can take the measurements from here, and then that will tell you where price is going to go. Yes, and this bear flag's target is somewhere around 9K, which we are going to, and I talked more on that when I was talking about my my area of interest. So that's how head and shoulders patterns work. Yeah, you have a shoulder and a head and another shoulder. You take the neckline of the head and shoulders pattern. Where price breaks to the downside, you wait for a confirmation candle. If you cannot wait and you want to maybe invest here, or say you want to short here, you want to short here, you will need a wider stop loss, and that's risky also. But anyway, that's the best thing to do is wait for a confirmation candle here before you go short on the price action. Now also you can wait and look if you will have any sort of confirmation on the stochastic telling you that price will continue to go to the downside. Here, what do we see? What is here that tells us that price can continue going to the downside? Here we see an overvalued stochastic right here. This overvalued stochastic. Also here we see an overvalued stochastic here and here. Now this is midway. Yeah, this is midway here, so it was pretty difficult to know if price is going to continue going to the downside here. But why would I think price is going to go down? Because I was already looking at this as a pattern. So I saw this, I would see this and know that this is an ascending channel. Yeah, I take the target for that channel, so from here to here, and I put down here. That will already tell me that price will go below the neckline of the head and shoulders pattern. So I would wait to see if price will close below that neckline. If it does closes below it and closes right down here, that will confirm the entire move to the downside. All right. So yeah, so basically that's what you have to do there. So that's for head and shoulders patterns. They can also be inverse head and shoulders patterns like so, and it's basically the same thing. Shoulder, head, shoulder, yeah, neckline, and you wait for confirmation. That's basically it. Now another reversal pattern is a cup and handle pattern. Now a cup and handle pattern is simply a head and shoulders pattern halfway. So if you take away this second shoulder here, or if you take away all of this here, you will have a cup and handle pattern. So a cup and handle pattern basically looks like so. I talked about it before. You have the cup and you have the handle. Now other cup and handle patterns can also look like this: cup and then the handle is like so. Yeah. Now in this cup and handle pattern, you can see another pattern. If you cut it from here and you are only looking at this, do we have an eraser here? Anyway, if you are only looking at this here, then this will be a bull flag. Yes, because if you take from here, this will be the pole, and we have price consolidation for further upside like so. So for the upside like so. So this would be a bull flag right here. But then if it comes back up here, if it comes back up to here, this price, if it comes back up to here, this will be the neckline of your cup and handle pattern. If it surpasses this neckline with another confirmation candle, you know that it is going here. The measurement for that is the distance from the neckline of this the first target, and I'll talk about the first target of head and shoulders pattern. So the first target is from here to here. Put here, that's your first target. Second target, put here, that's your second target. The same thing here. First target, put here to neckline. Second target, put here to neckline. Both to where price breaks out of the fractal here. Those are your targets for cup and handle patterns. Head and shoulders pattern, neckline. You take the neckline of the shoulder. So shoulder, this shoulder here, this is the neckline here, yes? So we can also take this one as the neckline, but let's just take this one. Now this shoulder is a bit complicated, but we'll just use it just so that the lesson does not get complicated. So if we take, let's erase a lot of this. Okay. Okay, now if you take this, put here, take this, put here, you can still put it there for confirmation of the other type of the head and shoulders. It will give you another target to the downside, which you have to expect all of it. But if you take and put there, it will give you the first target. Where is the first target? This candle close here was meeting the target of the first shoulder here. It's pretty remarkable if you ask me. it's the same thing. If you take and put a line like so, you'll see it cutting right across that target there. Then if you also take the target of the from the head, so that's the first target for your head and shoulders, pretty much like the cup and handle. So you don't take the target of the next shoulder, it will not make any sense. You only take target of the shoulder where price breaks out of. So this is the shoulder where price breaks to the downside. Yes, so you take the target of this shoulder and you put it where price broke to the downside, you get the target of that fractal. You take the target of the head, you put here, then it will give you this target down here. Price has not come down here already, and guess where that is? Now if I actually draw it correctly, it will be at 3,000. Yeah, that is the target for this price movement. Guess where 3,000 is? If I was to put this correctly, let's just draw it. If 3,000 will be the previous low, there are a lot of things on $3,000, a lot. On the daily time frame, you may not see it the same. Yeah, the daily is a bit more complicated. On the weekly time frame, you see a lot more things that are not really supposed to be there. Let's see. No, I don't think this is it, because on the weekly time frame, to get the exact measurement, you will not even, the weeks here are bodies on the daily time frame. If you put this here on the daily, let's put it on daily and put it correctly, because on the daily, if you draw that correctly, it should give you somewhere around 3K. Put it at the exact close here. But that's because we're taking this one. So we take the one that has the 3 closes, even though this has the 3-point close here. So this is where the fractal is highly validated. This is our confluence for this. So we take this, but we are only using where the candle we're using here. Now you may as well take it like so, but that will be that for getting the target of the bear flag, and that bear flag's target will be up here. All right, so the bear flag, you won't take this here and put down here, because the bear flag itself is working from here up to here. The bear flag is working from here upwards like this. So it will not be the same as taking this to put down here. You will have to put it here, and that should give us somewhat around 9,000, around 11. No, it should be around 9. If we put it like so and like so. Oh yeah, it won't give you 9, because we took from here to here. That was the measurement. So if you take from here to here, it should be somewhere around 9,000. Yeah, that is 7. Yeah, but this is how I got, and I said this before on my channel, I took the target for 7K from this bear flag here. That's how I got 7K. And was I doing this on the 3-day? This really gets confusing sometimes. So if you take this from here, okay, this will give us the target for this head and shoulders, and that is coming right down to here, where it broke down from here. All right, let's cancel all of this. This is really becoming confusing. Okay, good. Now let's take the targets. So we have our head, shoulder, shoulder targets. Okay, good. So we have this, and here. the first two closes here. You could take like this. On different time frames, you will get different different answers, different targets. Just finished. Hello. Yeah, we are here. So we are taking from here and here. This will not be drawn correctly. This will be putting us somewhere around 2000. Interesting. This is just to say that we should be ready for anything here, because this is giving us 2000. Let's see where this one will give us. The one we can fully trust should be this bear flag here, because that has a more accurate prediction. This has a much more accurate prediction. The 1.618 is somewhere around 3K if drawn on the 3-day time frame. I'll make a predictive analysis video on all of this. Okay, it should give us something around 7,000. Yes, 7,000. Okay, because this is clearer. But the head and shoulders is a lot more distorted. I think I was working on the 3-day time frame when I got that target. I'll make a predictive analysis video for this. So that is how you get your head and shoulders target. You have to take the first shoulder, second the head, and the second shoulder. You take the target following the necklines here. The first target will be the distance from here to here. The second target will be the distance from here to here. So basically it has two targets, and that is your trend reversal. If we are looking at this head and shoulders here, then basically we are looking at somewhere around 2000. It's shocking even for me. I mean, then there is a lot more pain to come if that's true, because if we are taking this from here to here, we cannot take this as the neckline. That will be us trying to forfeit. Or can we? You could take this as the neckline here. Take this as the neckline here, but that will give us a very near value. This will give us about 21,000. And if we are to use the trend-based fib here, we'll be taking this. This will be from here to here to here. Then BTC is at free fall, basically. It's at free fall if we are using the trend-based fib. Anyway, this will go too far if I want to do all of this analysis now. Now, we've talked about the head and shoulders. We have talked about the cup and handle pattern. We also have the, I think the Adam and Eve. Adam and Eve pattern is a continuation pattern actually, because you'll have Adam looking like so, and Eve looking like so. So if you find a structure that looks like this will be the Adam and Eve. Some time ago I was trading this Adam and Eve with the mates on Instagram. I think that was around here, or somewhere around here. I think that, yeah, that's the Adam and Eve here. Let's go to the 4 hourly. You'll be able to see him, to see Adam and Eve here. I think Adam and Eve, where are they? Yeah, this is Adam and Eve. This is Adam and Eve here. This is Adam and Eve. So this is Eve, this is Adam, this is Eve, like so. Neckline, target from here to here. And I think we were waiting for the target, this target, to hit here on Instagram when price reversed to the upside. I remember that time very well. We were waiting for the target to hit down here when price reversed to the upside. So that's how crazy it can be when you are trading this stuff. But what I failed to notice on that day was that the stochastic here was giving us these lower lows here, as price gave these lower lows. But now these lower lows, you would see them as a drop in momentum. So you need the momentum to be going up to show strength of the price action you are seeing. If you see the momentum decreasing, it simply means what you are seeing is not really holding up. It's going to collapse, and in that case it went up. All right, so yeah, that's it for so that's basically it. When you understand head and shoulders, you will easily get cup and handles, you will easily get this Adam and Eve kind of pattern. I don't know if you guys are still there. You can ask any question. If next 12 days, what most possible outcome? Can we analyze short next week? Yeah. Sorry, just finished work. All right. So yeah, let's do some analysis as we close the session. So this is BTC on the 4 hourly time frame. We can see that BTC is actually holding down here. We had this fall from here. Yeah, so this fall from here, the fall from here and staying down here. I told you just about some minutes ago that if you see price, now this is an inverted chart, yeah, so you can see 14, 13, 12 going up and 17, 18 going down, inverted, or it's like opposite. So if you see price go up like so and stays up, it means that buyers are sustaining price to the upside. So buyers are overall winning. It's like the talk of war I explained in my first lesson. Yeah, you have someone here and maybe his counterparts, some people here. Now other people, they are like pulling a rope, and you have this guy over here. Now if this guy is pulling this guy mostly to this side and here, and this guy is not really let's put it now like so. So if this guy over here is now here together with this guy, if they are here instead of here, it means that this guy overall and his mates are winning, because they have pulled this guy over here. Let's say we have the line somewhere here, yes, and this guy, maybe this guy has not completely gone to the other side, to say that these guys have won, but this guy is way closer to the line, you know, to this guy's side than this guy is to this guy's side. So overall this guy is winning, and that's exactly what we are seeing there happening. It is not the perfect example of a bear flag or a bull flag, but it shows that buyers or that sellers are buyers in this case are winning. So In this case, you would say that buyers are winning because price is sustained above here. Sellers are not succeeding to pull price down to here. Yeah, so sellers have not succeeded. So the most likely outcome here will be that price goes up. Instead, this is an inverted chart, so if we go like so, then you can see what we are talking about. So we do expect that no matter what price does here, except it actually comes by half of this place and continues to go up, then we have the sellers have actually the buyers have actually won the race here. So we generally expect that price will go to the downside from here, except it goes up, of course. Now on this chart we can see a few things. Let's take that back. Okay, good. Now on this chart we can see that this happened here. We had this fall from here, from the crazy stochastic. If we go to the other time frame, you can see what we're talking about. Okay, now price dropped from here and it dumped. Yes, so for now we are overall bearish because sellers are basically winning here. Up till now they are still winning. Now if we look in deeper, what will we see? On the daily time frame, are we overbought or undervalued? Are we overvalued or undervalued? Let's go to daily and we will see that we are overvalued, but the blue line there is still trying to cross the red the brown or red line to the upside. That's brown, I think. Okay, so the blue line there is still trying to cross the red line, but if we take this from here, we'll see that buyers are actually showing a bit of strength here. Buyers are showing some strength because this could actually result into a double bottom formation like so. But do we think that's possible? If this is showing us this type of price formation here, if it is showing us an overvalued stochastic here, we know that a dump can easily be at the corner. This one here, this candle is confirming this one. This is a bearish engulfing candle here. This is you would say that this is a bearish pin bar pattern. Bearish pin bar pattern means you have this doji here which stops the bullish candle to the upside. Now but that has to be followed with a full bearish candle. If this was full, then it will be very, very confirmed anyway, but this filled the wick here, not completely though. We would still expect some downside price action here. If we are to go to the lower time frames, let's go to the 4-hourly and see if we can have any proof to the thesis. Now on the lower time frame, you could easily say that BTC is forming a bullish some bullish price action here, the same like I was talking about before. It's hanging up and the sellers have not succeeded to bring it back down. And on the stochastic, are we seeing any divergences? Not yet, we are not. Let's go dig in deeper. Now that's a bull pennant, actually bull pennant. So we actually, BTC could go up due to this price action. It's not really bull pennant. Just as a reminder, bull pennant is like this, and descending triangle is like this. Okay. Yeah, you would easily see this and call it a descending triangle. Descending triangle. Another pattern that you can know is the triple bottom and triple top. Triple bottom is a reversal price reversal pattern similar to the head and shoulders. Same ideology there. Same ideology. Triple top looks like so. Equal tops. So you have this, this, and this. Same how to get the targets, same. So that's triple bottom, triple top. Triple bottom will just be the exact opposite of it. So you have like this and this and this, and that's exactly what we are seeing here. And it's not always exactly like looking exactly the same. It's just similar, you know, similar looks, like so, like so, like so. So this should do this. We were talking about Chainlink going up before. Of course, BTC has to go up if Chainlink is to go up. So it will be very unlikely that Chainlink goes up without BTC going up. But if we look here, we will see that this candle actually closed out of this descending trend line here on the 4-hourly. So this is the beginning of the 4-hourly. We could have the downside price action, but if this candle does not close below this trend line here, then BTC will go up. Where will it go up to? It will go up to the first target here. It will go up to this first target. You could take the first target like this, which will be 1668. Second target, which will be 16742. Yeah, 16742. And if it is to go for the target of the bull pennant, so we'll just show this, then I will give my own opinion. That will be 17538. 17538. And what will 17538 be? 17538 will be the that will be the middle. That basically be 50% retracement to that candle I was talking about. Or is it? No, 50% retracement of a candle on the daily. Supposed to be around here. Was that on the 3-day? Okay, now if it comes up here, you see these previous weeks here. This was the first supply zone here. So if it comes up here, it has a very high likelihood to go to the downside, like so, because it will get supplied like here, and we'll talk about this supply and demand zones in another video. But you can easily see supply and demand zones as areas of support and resistance easily. The same follows the same methods, just names changing and perhaps a bit more psychology changing there. Yeah, so if it comes up here, would easily see it go back to the downside, because this now will be the target of this bull flag here. But then we see the daily in the overbought. So can that really happen? The daily is in the overbought. It can stay overbought like so for a long time. Okay, if we see this here like a descending wedge, this would have been the first target. Yes, so the first target would actually be here. $17,223. 17,223 will be the first target of this descending wedge. The descending wedge is bigger than it has, like, it's on the higher, it's how would I explain it? It's on the higher trend than what we are seeing in here. So we would have to base our thesis on the descending wedge that we are seeing here. But this descending wedge, yes, descending wedges are bullish. So actually we could go up. Yeah, we could actually go up. We could actually go up. But I would like if I was to short, I will want to short somewhere around this target. this 17.2222.211 or 17.194, because I'm putting it right at the retest here. I would like to short at that 17.194. I will not want to long it because the daily is in the overbought, meaning that it can just as well go down. But if I have a proper confirmation for downside price action, then I can short. But I would like for it to go up before I issue a short order. That short order will also just coincide with this supply zone that we see here. When you see a lot of wicks at a single region, know that that is where there is a lot of supply. People just buy here and sell there and supply the coins. Yeah, so I would want to short around here. I would like to short around here. I won't wait until here, because waiting until here, it may as well not come up to here. I would like to hold it here and then I short. I know that it could actually go up there, but I would not like to wait. So let's confirm it. Let's see what's going on with the trend-based fib. We take the trend-based fib, last this one, and this one is higher. This one is lower, and this one, and yeah, the 1.618 to this one is at 10,000, 9,000. Yeah, the 1.618 at 9,000. As I said before, this is like some kind of a unity place or some. So we think price will come down to 9K here. But I would like to take my short around here. Around here is where I would like to take that short. Price goes up in a rally and then dumps right back down. Yeah, that's why I would like to take the short. So what do I think is going to happen in my opinion? Let's see. I think on the 1 hourly, on the 4 hourly, we can see that price has been consolidating up here, even on the daily as we are seeing it now. It's just that we have about 5 candles, so it's not really noticeable. But on this daily, we can see that price has been consolidating here, and that shows some strength. However, the stochastic is well in the overvalued, so at any moment price can easily return back to the downside. The fact that it is still consolidating here shows that there is still some level of buyer strength in the market. So by that, I would expect that price goes up to here, which will be the target of the descending wedge down here. I think the maximum that price can do would be about 17.5, about 17.538 or 17.6K. That will be the maximum, and I think price will turn from there and come back to the downside, because it simply won't be sustainable. The stochastic or even the volume, as you can see, is already dropping down here. It continues to drop as price goes to the upside. So price has been going up here, but volume is dropping here. So simply it's not it's a bearish divergence. So at any point in time, I would expect it to drop, and I will be taking a position around here, and I will do further calculations on this and DM you or send you a limit short order to have in your positions as well in the groups. So yeah, that's what I'll be expecting here. This close up here, this close up here was followed by a bearish pattern, this bearish candlesticks here. But this one is looking to be bullish. Yes, even if it comes to the downside, I would expect it to still bounce somewhere around 16.22k, which will be the 0.382 Fibonacci. Yeah, I would expect it to bounce right back down here and then go up to here. Yeah, because this here is kind of bullish, because it's been sustaining here for quite some time. I would expect it to go up. If it goes up to here, if it comes right down here, I'll close my trade on my challenge, the ETH trade that I took. Yeah, I'll close it, and probably no, I will not long it. I would not like to long when I'm seeing an overvalued stochastic. I'll just be looking for shorts right now, because at any moment it can just collapse. That's why I entered that trade, even knowing that it's going to go up. I know that there will be a collapse coming and it will be horrible. So right here, I'll actually be expecting a push, a sharp push, then a drawback to the downside. So I'll do some calculations and leave some limit orders so that you guys can also partake in the trade if that is to happen. I think that will be the best place to take a short order. Yeah, around there, 16.2, that 17.194, 17.1, that's where I would want to have a short order, a limit short order, a limit short order here. And where will my stop loss be? But if I'm getting a limit short order around here, my stop loss has to be somewhere around here, which is like a 6. I might take this short on a 7x or a 5x. On a 5x, actually. I want to do lower leverage. Higher leverage is really problematic. Yeah, I'll take this on a lower leverage. If it goes up a bit, I'm going to add to the position. But if it wants to continue going, then it will go down, hopefully. But if it goes up, then at least it will not be huge loss. What pattern could play out here if this was to really go up? That will be a rounding bottom. Rounding bottom patterns are just like halfway through a cup and handle pattern. So you have a cup and handle pattern like so. Yes, so rounding bottom patterns will look much like so. You'd have a rounding bottom like so. But even this, half of this is a parabola. There are like thousands of patterns. But so you have to, I'll leave a link or a photograph in the groups, a screenshot of maybe some of the patterns so that you can see them. When you start to see them on your charts, you will easily notice them, because even half of this is a parabola, which still means it's going to go to the downside. When it breaks down and closes here with a candle, wait for confirmation, and then you can take a position. So yeah, let's see who is still here up till now. Who is still here? Yes, it will be on the Vase signals. I will leave it on Vase signals. You missed the first part. Oh crap, that's a bit bad, but no problem. We will continue this, and anytime you have a question, to ask, you can always ask here. Yeah, there is no problem. I can always do a brief recap of what we've been talking about. Hello. All right, cool. All right, cool. So yeah, that's it for today. We will try to make this every Sunday midweek. We can make like a semi session where we will do a rundown on what has been going on, then we discuss some price action before we take positions. All right, okay, see you in the next time. Have a great time. I don't know what time you are in